Hello guys, welcome to my channel, Deko Mohammed Official. I'm your host, none other than Deko Mohammed. Today, I would like to focus on advanced taxation, taxation of company, specifically taxation of leasing. I would like to do a question that was tested in CASNEP CPA Advanced Level, Advanced Taxation, September 2021, question 1P. I will still post this question under as a link in the video description so that you can able to download, and if you want to, you can also print it, but also you can also see it here on the screen as I going to read the question. The question goes like this. Boxmarks Enterprise is a resident company that deals in asset leasing. For the year ended at 1st December 2020, company reported the following transactions. Number one, asset lease in the course of the year. The first bullet, we have manufacturing machinery to Pendo Limited at an annual lease cost of $4,200,000. We have 10 saloon cars to Samtec Tours for 4 months at $40,000 each per month. At the end of the 4 months, Samtec Tours returned 4 saloon cars and renewed the lease for the others for an additional 3 months at discounted pay by 10%. 5 lorries to Ate Limited at an annual lease of $800,000 per lorry. However, the lease was terminated after 9 months after it was found that the lorries had serious mechanical problems. 6 pickup vehicles to Fahari Limited in Rwanda for $200,000 per month for the whole year. Computers to Digitex Limited at an annual lease of $200,000. Next, we have the next thing about is Boxmarks Enterprise incurred the following expenditure in the course of the year. Sorry for that. Boxmarks Enterprise incurred the following expenditure in the course of the year. Purchase of manufacturing machine for leasing, 6 million. Installation cost and repair of the manufacturing before use, 240,000. Purchase of 2 saloon cars, each at 2,100,000, 4,200,000. Purchase of a lorry 4 tons, 1,800,000. Administration expenses, 2,400,000. Legal expenses of 240,000, out of which 100,000 was in respect of defense of an alleged breach of lease agreement. Next, marketing cost was 300,000, 80 being for erection of a billboard for advertising. The following additional information was provided. A pickup vehicle whose written down value was, as at 1st January 2020, was 420,000, was sold upon the expiry of the lease in 2020 for 580. The written down values of the following assets as at 1st January were this: lorries 4 ton, 4 million, computers 420,000, motor vehicle. The figure for computers is 420,000. Sorry for this. It is not 420. It is 420,000. Motor vehicle, it is 1,200,000. 1,200,000. Next, furniture 180,000. Other income of Boxmarks Enterprise include: number one, interest income from Ufanisi deposit, taking microfinance 240, dividend income from Wananchi Sacco 120 net, royalty income of 40,000 net. Corporate tax rate applicable during the year was 25%. So you are told, required, the adjusted taxable income or loss and tax payable, if any, for Boxmarks Enterprise for the year ended 31st December 2020. So let me stop sharing this and then solve the question. I hope you have the question. You are able to download in the link description, or if you are not able, you have written the question. So me, I have the question, so I'm going to solve it. The question, let me stop sharing this. And I also, let me have the new share. Then I have it at whiteboard. So, yes. Then I'm going to have the text pattern. First thing you're going to start is the heading of the question. The heading should read as Boxmarks Enterprise. The heading should read as Boxmarks Enterprise because it is from Boxmarks Enterprises. Then let me enlarge this one so that at least we have enough space of working it out. I have to enlarge it so that at least we get a good space. Boxmarks Enterprise. Then what are we going to prepare? We are preparing a taxable income computation. Taxable income computation. Next, it is for the year ended at 1st December 2020, 31st December 2020. So I hope you have the question. The first thing says, remember, in preparing taxable income, we have two approaches. We either use the gross profit approach or we use the net profit approach. We either use the gross profit or the net profit approach. And if you look at this question, we don't have the net profit. So the only option is we are going to use the gross profit approach. Because we don't have the net profit, we are going to use the gross profit approach. We are going to have our income, we less the allowable expenses. Then we get our taxable income. So number one was talking about, we are told asset leased in the course of the year. Whenever we lease an asset, that's an income. So we are going to write them down. There are around 6 of them. So let me start. I have machinery. The first thing was manufacturing machinery to Bendo Limited at an annual lease cost of 404,200,000. So we have machinery to Bendo Limited. We have machinery. Let me go away with these capital letters. Machinery to Bendo Limited. Machinery to Bendo Limited. The amount is 4,200,000. Next, we are told 10 salunkas to some tech tours for 4 months, 40,000 each per month. That means that first of all, it is the salunkas for some tech tours. We have salunkas to some tech tours, Salunkas to some tech tours. Remember, let me solve for you. There were 10 salunkas. We have 10 salunkas. Then it was for 4 months. So you have to multiply it by 4. 10 salunkas for 4 months. So you multiply it by 4. Then it was 40,000 each per month. So we multiply it by 40,000. You multiply by 40,000. Multiply it with 40,000. You need to be very careful with these things because we are told we're having a 10 salunkas to some tech tours for 4 months. 10 salunkas for 4 months, then times 40,000. So if you solve that, you are going to get, let me take my calculator. 10 by 4 by 40, 10 by 4 by 40, that is 1,600,000. So we are going to have, let me enlarge this thing, at least we have a good space of working it out so that we get a good space. Let me push the figures to the corner. So it means we'll have 1,600,000. Next, we are told, next is at the end of the 4 months, some tech tours returned 4 salunkas and renewed the lease the lease for others for an additional 3 months at a discounted pay by 90%. Remember, is Salunkas, the Samtech tours, there were 10 Salunkas. Out of these 10 cars, we are told they returned 4 Salunkas. So if 4 has been returned, it means we are remaining with 6. So you take that 6 Salunkas, which has been renewed for an additional 3 months, multiply by 3 months, the amount is the same, then, but there's a discount of 10%. So we are going to get the 90%. So still it is Salunkas to Samtech tours, Salunkas to Samtech tours, Salunkas to Samtech tours, Samtech tours. So now remember there were 4, but only 4 Salunkas have been renewed. At the end of Samtech tours return, they returned 4 Salunkas, so we renewed 6. If they return 4 and it was 10, 6 will remain. Then multiply this, we were told for an additional 3 months. So you multiply by that 3 months. Additional 3 months. The amount is still the same, 40,000. Close the bracket. This comes to how much? 6 by 3 by 40. That is, sorry for this. Remember, there was a discount. There was a discount by 10%. So we need to multiply this by 90% because they were given a discount of 10%. So we get that 90%. So multiply this, then close the bracket. This comes to how much? So times 90%. So we'll have 648,000. We're going to have 648,000. Next, we are told 5 lorries to Ate Limited at an annual lease of 800,000 per lorry. However, the lease was terminated after 9 months after it was found that the lorries had serious mechanical problem. First, it is the lorries to Ate Limited. Lorries to Ate Limited. Lorries to Ate Limited. There are how many lorries? Let me open the bracket. We are told there are 5 lorries. Then we are told the lease was 800,000. Multiply this with 800,000. 800,000. Then the lease was terminated after 9 months. That means we have to prorate it to 9 to 12. So multiply this 9 over 12. 9 over 12. Then close the bracket. This comes to how much? 5 by 800 times 9 out of 12. We'll have 3 million. We're going to have there's 3 million. 3 million. Sorry for that. We're going to have 3 million. 3 million. Lorries to Ate Limited is 3 million. Next, after lorries, we are told 6 pickup vehicle to Fahari in Rwanda for 200 million. Remember, this company, Boxmax Enterprise, is a resident. So we need to tax, we also tax that. So we are told it is the pickup vehicle to Fahari Limited. So we have pickup vehicle to Fahari Limited. Let me open the bracket. Pickup vehicle to Fahari Limited. There was 6 pickup. Then multiply that with 200,000. I hope you have the question. You can read with me if you have printed the question or you have it on your file, 200,000 per month for the whole year. If it is per month for the whole year, a whole year we have how many months? We have 12 months. Then we get the computation. We take 6 by 200, 6 by 200 by 12. We get 14,400,000. That is 14,400,000. Sorry for that. 14 million, 14 million, 14 million, 14,400,000, 14,400,000. That is the pickup vehicle to Fahari Limited. Then lastly, we told computers to Digitech Limited at an annual lease of 200,000. We have next is computers to Digitech. We have computers to Digitech Limited. Digitech, you have Digitech Limited, computers to Digitech Limited. It is only the annual lease, which is 200. So we write 200,000 exact. 200,000. So we are done with that. So from this, we less the allowable expenses. And remember, if there is any other income, we need to check if there is any other income. Before we less the allowable expenses, we need to check if there is any other income. So if you look at number 2, it's all about expenses. We don't have any income there. Number 3, we are told the following additional information was provided. A pickup vehicle whose written down value was 420 that was sold upon entry expired release of 220 for 580. So here there is an income because we buy this thing for 420, but we sold them for 580. So we have profit on disposal of pickup vehicle. So we have profit. That is under the number 3, additional information. I hope you have the question. Profit, that is profit on disposal. Profit on disposal. Profit on disposal of motor vehicle. It was pickup, it was pickup vehicle. Disposal of pickup, it was pickup. So the amount, initial amount was, we take 580, we buy it for 420, but we sold it for 580. So there's a gain there. So we less it 420,000. This comes to how much? 580,000 minus 420. That is 160,000. 160,000. Next, the number 2 written down values was this. No, that will affect our capital expenditure. Number 3, other income of Boxmarks Enterprise included. Number 1, interest income from Ufanisi Deposit Taking Microfinance 240 net. Remember, interest income attracts withholding tax of 15%, which is not final. So it is not final. We'll charge here, then we are going to subtract when we are calculating our tax liability. So interest income is not, the withholding tax is not final. So you are going to write interest income. You're going to write interest income from Ufanisi deposit. So Remember, we are told it is 240 net. Net means the withholding tax has already been subtracted. So we don't have to gross it. We have to gross it because the withholding tax has already been subtracted. So we need to get the 85%. We need to get the 85%. So you take 100 over 85, multiply this with the amount which was, multiply this with 240,000. 240,000. Close the bracket. This comes to how much? 100 divided by 85 times 240. So you have 282, 353, 282. Let's have here 282 to the nearest decimal places. 282, 282, 3, 282, 3, 5, 3. I don't want this thing to go to the other side, so let me minimize here. So I remove this deposit so that at least I get some space for that. Sorry for that. Deposit. Let me have from deposit as DPS. Fancy. Let me just do away with it. I just have interest income from Fancy. So it will come as 282, 282, 3, 282, 353 to the nearest decimal places. Remember, I said interest income is not a final tax, so we have to tax it twice under the tax liability and also here. And the net means this is the figure. Net means the withholding tax has already been subtracted. If it was gross, that means the withholding tax has not yet been subtracted. Next thing that we need to undertake is that number 2, we are told, I'm still reading the additional information. Dividend income from Wananchi Sacco, 120,000 net. Remember, we have 3 types of dividend. We have exempt dividend, we have qualifying dividend, we also have non-qualifying dividend. Exempt dividend, this dividend, they don't attract any tax. But qualifying dividend, this is a dividend income whose withholding tax is a final tax. You get it? Qualifying dividend, this is a dividend whose income is withholding tax is final. And they are only from 2 sources. They are only from the limited company and the SACCOs. Limited company and SACCOs, those are non-qualifying dividend. Sorry, they are qualifying dividend because their income withholding tax is final. Those are qualifying dividend. But non-qualifying dividend, these are dividend whose withholding tax is not final. That means we are going to tax here, and also it also affect the tax liability. Example is from corporate societies. Dividend from corporate society is a non-qualifying. So for this case, we are told dividend income from Wananchi Sacco. Wananchi Sacco is a Sacco. That means it is a qualifying dividend, which is already final. So we are not going to tax. We are not going to tax it because the withholding tax is final. The withholding tax is final. You need to take care of this information so that because you don't have to bother with it. If you understand the rules, it will become very easy because this thing will also affect our tax liability. When we are going to calculate our tax liability, it will affect them. Next, we have royalty income. Royalty income, the taxable income is also a final, so we are not going to tax it. The withholding tax is final. This is we deal with the same case with the dividend. I hope I'm done with all the income. What I'm going to do next is that we are going to get the total income. Let's get the total income. We have total income, total income, total income. So the total income there is 4,200,000. You add there 1,600,000. You add it to 648,000. Add it to 3 million. Add it to 14,400,000. Add it to 200,000. Add it to 160,000. Then add it to 282,353. It is coming to 24 million. Let me write it, 24,490,353. 490,353. So let me reduce the space here, so at least you see what is at the end. Sorry. Yes, that's the total income, 24,493,53. We have the total income. So we are using the gross profit approach. So in this case, we are going to subtract we say less allowable expenses, less allowable. So for this case, I'm going to use a new page. So let me open a new one. So I say less. So I have to open again the whiteboard. Sorry for the interruption. We have the text. So we say less. Let me close this thing so that you don't disrupt your attention. So we say less allowable expenses. These are continuation, guys. Allowable, yes, allowable expenses, less allowable expenses. So let's go for the expenses part, number one. Remember, number two, we are told Proxmax Enterprise incurred the following expenditure in the course of the year. Purchase of manufacturing machine for leasing, that's a capital expenditure. It qualifies for, where is going to qualify for investment, building induction, and also qualifies for wear and tear. Next, installation costs and repairs of the manufacturing machine before use, that is a cost under manufacturing machine. Purchase of saloon cars, that's a wear and tear. Purchase of lorry, will affect wear and tear, that is capital expenditure. Next, we have administration expenses, that is allowable expenses. Administration expenses, administration expenses. Let me enlarge this size so at least it fits the board. So we have admin expenses. The admin expenses is how much? The amount is the admin expenses. The amount is 2,400,000. So it is good to write them on the debit side, at least so that your income is on the other side. If I have to correct on this, before I continue, remember our total income that we had on the other side. Let me write it here, at least so that we use it as an analysis. If I go back, we have 24,490,353, 24,490,353, 24,490,353. Let me write it here. 24,490,353. So that we list the allowable expenses. So we are going to list them. We are going to list the allowable expenses on the debit side. let's have 2 million. Admin was 2,400,000. Yes, it was how much? 2,400,000. 2,400,000. Next, after admin, we have legal expense of 240,000, out of which 100,000 was in respect of defense of an alleged breach of lease agreement. Remember, in taxation, any illegality is disallowed. So that 100,000, we are going to subtract it from 240. So let's have the legal expenses. You have the legal expenses. Legal expenses. So we take 240. Take 240,000. Remember, the space is too slow. Let me use just 240, but take it in the perspective of 1,000. 240 minus 100. Remember, the space is too short, so we are going to have 140,000. 140. Take it. This one takes these 240 as if it is in thousand. So we have 140,000 as our legal, because that 100 illegality is tax we disallow. Next, we have marketing cost of 300, out of which 80,000 being for erection of a billboard for advertising. Remember, advertising there are two categories. There are one which are allowable, and there are ones which are disallowable. Advertisements which are disallowable are the adverts which are being used for permanent advert. All advertising that are being used for permanent advert we disallow. This include billboard, neon signs. Those are disallowable because it is a permanent advert. But those who are temporary advert, like television, radio, we allow them. For this case, we are told marketing cost was 300, but 80 was for billboard. Billboard is a permanent advert, so we are going to subtract that. Let's have the marketing cost. Marketing cost. Let me take perspective of being 1,000. So billboard, the billboard was 300. We take away how much? We take away the billboard. Advert was 80,000. Permanent advert was 80. That was for billboard. So if we take 300 minus 80, that is 220,000. 220,000. Next, we are told the following additional information was provided, written down. So the only thing remaining here is the capital allowances. So we need to compute the capital allowances. So what we are going to do, we say capital allowances. Capital. We are also going to subtract it, capital allowances. Let me start from the top. Number 2. Boxmarks Enterprise incurred the following expenditure in the course of the year. We have the purchase of manufacturing machinery used for leasing. Then we are told in installation cost and repairs of the manufacturing machine before use is 240. That means that 240 we are going to add the manufacturing machine because it was an installation cost. We are going to add. So the total cost for machinery is 6 million plus 240,000. That means the total cost is 6,240,000. So we have manufacturing machinery, manufacturing machinery. Don't mind the spelling. So remember, we are going to use the rates have been changed. We are going to use the new rates, and you're able to download those rates from the CASINEP website, even if those past papers of taxation they have in the first page. First page, you have the rates. So from this rate of mine, it is saying machinery used for manufacture is 50%, 50%. So we're going to get 50%. Remember, these rates are available in the first page, so you can able to get that site and download the rates. So we take the 50%, 50%, multiply this with 6,240,000, because the other one, let me reduce these zeros, so that at least because of space, let me reduce the zeros. This comes to how much? Times 50%, it's coming to 3,120,000. 3,120,000. Next, after the manufacturing machinery, in the order of the question, we have the batches of 2 saloon cars. Remember, these saloon cars, we can also treat the same case with the motor vehicle, because they also a motor vehicle. They're generally a motor vehicle. So let's have motor vehicle as a general name, but we are going to take care of all of them. First, there is a written down value. If you go to number 3, the following additional information was provided, not number 2. We are told the written down value of the asset was as follows: lorries 4 million, computers 420, motor vehicle was 1,200,000. So we take that 1,200,000. First, the rate for motor vehicle, is 25%. If you check, you have motor vehicle and heavy earth moving equipment is 25%. So you take 25%, 25%, multiply this with, open the bracket. The opening value was 180. Add these two. We need to add this motor vehicle. We need to add it to. We add saloon cars. We have purchase of 2 saloon cars, each at 2 million. They are coming total of 4,200,000. 4,200,000. Then from this, there was a disposal. If you check on the number 3, part 1, a pickup vehicle whose written down value was 420 was sold upon 580. So when we're disposing, we take the value of the sale, which is 580, So that means I take 180,000, 180,000 plus 180,000 plus 4,200,000, then subtract 580,000, then multiply this with 25%. This coming to, because we have, sorry, there is a mistake here. Remember, in the additional information, motor vehicle was 1,200,000, not 180. Sorry. In the written down value for motor vehicle was 1,200. The 180 is for furniture. So we need to take here. We need to note it down. 1,200,000. Sorry, 1,200,000. 1,200,000. We need to add another 0 again. Sorry, the 580 was for the 180 was for furniture. So the motor vehicle is 1,200,000. So we take that 1,200,000, we add the 4,200, subtract 580,000, then multiply by 25%. So we get 1,205. So the wear and tear for this is 1,205. 1,205. 1,205. 1,205. We'll go for next. After motor vehicle, we have purchase of lorry. Let's write the lorry. Now, the written down value of the lorries was 4 million. So first, lorries are also 25%. The rate of lorries are 25%. 25%. Let's open the bracket. The written down value is 4 million. From this, we need to add, if you go to note number 2, bullet number 4, we have purchase of a lorry 4 tons, 1,800,000. So we need to add that 1,800,000. So close the bracket. What is coming to 4 million plus 1,800,000, multiply this with 25%. It is coming to 1450. Yes, 1450. Coming to, write it here, 1,450,000. 1,450,000. 1,450,000. You're done with the lorry. The next, after the lorry, in order of the arrangement, we have the computers. We have computers. Let's go for computers. Computers were only having 420,000. Computers were 420,000. Remember, the rates for computer software calculators is 25%. So we take that 25%. Sorry for that, 25%. Multiply this with the figure for computers is 420,000. I hope you are following this. You have the question. I also posted on the link. 0.25 times 420 coming to 105,000. 105,000. Remember, we are getting these capital allowances 105. We need to subtract it from the total taxable income, which was 24,493,053. So after computers, lastly we have the furniture. We have the furniture. Furniture, it is 180,000. It is 180,000, and it's only one figure for furniture. Yes, 180,000. So we need to get that furniture. But remember, in the rate for furniture and fitting, it is 10%. These rates are available in the first page. If you download those side of the website, the questions in the first page we have the rates. So it is 10%. Shift, we get the percentage. 10% of how much? Multiply this with the figure for furniture, which was how much? 180,000. 180,000. Then this comes to how much? 10 divided by 100 times 180,000, coming to 18,000. The furniture is coming. The figure for furniture is coming to 18,000. 18,000. If we confirm, if we have written all of them, we have the lorries 1450, 1,450,000. We have it. You have computers 105,000. We have it. Motor vehicle 300. Motor vehicle is 1,205,000. We have it. We have the manufacturing machinery 3,120,000. Furniture, yes, we have everything. So we add this. Remember, capital allowances is also a part of the allowable expenses. We sum up these admin expenses, legal expenses, marketing costs, and the capital allowances. Then we subtract it from our total income. So let me add them. 2,400,000 plus 140,000 plus 220,000 plus 3,120,000 plus 1,205,000 plus 1,450,000 plus 105,000 plus 18, 8,658,000. So this is coming to 8 million. So we have 8 million. 8,658,000. Sorry for that. Let me reduce this one. 8,658,000. Let me add again. So I confirm if I'm accurate. 2,400 plus 140 plus 220 plus 3120 plus 1205 plus 1450 plus 105 plus 18. Yes, we are correct. 8,658,000. So this 8,658,000 we subtracted from 24 million to get the taxable income. So we say now we subtract the taxable income. We get now the taxable income. Taxable income of how much? Subtract 24,490,353. 24,490,350 subtracted from 8,658,000. That's coming to 15 million. This comes to 15 million. 832,353. That's a taxable income. Remember, the question was asking the adjusted taxable income of which we did it and tax payable, if any. So we need to get the tax payable. Let me open also a new page for this. We get the tax payable. Let me have the whiteboard text. I get the tax payable. Let me close this one so that it does not disturb you. Tax. Let me enlarge them so that at least we have a good space for it. Tax payable. Now, let's first get the gross tax liability, of which we calculated the gross tax liability. Remember our gross tax liability. Remember the tax rate in the question we are told. The last thing was corporate tax is 25%. So for you to get the corporate tax liability, you take that 25%. Multiply this with our taxable income. Remember our taxable income was 15,832,000. So multiply this by 25%. Multiply this. Sorry for that. Yes, 25% by take 15 million, multiply it with 15 million, 832, comma 353. This comes to how much? Let me enlarge this one so that at least we write this answer very well. Yes. Now this will come to how much? Times 0.25. 3 million. We'll have 3 million. If I come, at least you get the difference. If I write the the summation, you'll be able to see it clearly. This comes to 3,958,958. 3,958,088,025.25. So remember, there are some tax which were not final. So we need to list them here. Less withholding tax. Less withholding tax. Less withholding tax. And I remember very well, the interest income from ufanisi. So we have the interest. It was not, remember we said dividend income, non-qualifying dividends are not final. We tax them the other side, we also tax them here. So interest income from ufanisi. Here you can get two ways. There's two ways of getting this interest income. The amount, the initial, first they got the other way. The initial amount that we had, it was 240. But when we calculated the 85%, it was coming to 282,350. Let me show it for you. Remember, this is the figure I'm talking about. This interest income for ufanisi, it was 282,353. 282,353. 282,353 subtracted from 240,000, which was the interest income given, 240,000. This comes to how much? 282,353 subtract 240,000. 42,000 is coming to 42,000. 42,350. So it means we need to subtract that from the gross tax liability. The other way of getting is just getting 15% of this 282. It should give you the same. So let me subtract 3,958,000. This one should have a bracket sign because we are subtracting this. So it will have a bracket. Sorry, I think you should just get it. Just know that it's a subtraction. So if you subtract 3,958,088.25 subtracted from 42,350, your answer is 3,915,000. You are taking 3,915,738 to the nearest decimal places. 915. I hope you enjoyed this class. I was your host, none other than Deko Mohammed. We are going to have so many instructions. Thank you for watching. We're going to have so many illustrations on taxation and also in the financial accounting and other management accounting, financial reporting, all other accounting topics. I hope you enjoyed the class. You can also comment the question that you want me to solve, or the topic that you want me to tackle next. I hope. Thank you for watching. Subscribe, like, share, and welcome. Thank you.